Hello, this is Kirill from forexboat.com and welcome back to the course on Forex trading. Today we're going to talk about the moving average indicator. So personally, I think the moving average is a very powerful indicator. It's very simple, and in Forex, very often simplicity is the key to your success. If you overcomplicate things, then you might miss out on the obvious. So today we're going to talk about moving average. We'll see how it's constructed, and then we'll see a few examples of how to use it in trading strategies, and I'll just give you a few more thoughts on this indicator. Alright, so similar to what we did in the past tutorial with the average true range indicator, let's have a look at how the moving average is constructed. So if we take the past 4 bars and we take the close prices of these bars and then we plot the average of them, it'll look something like this. Next, if we move to 1 bar to the left and we take the average of the 4 bars there, then we plot it, it'll look something like this. Then if we keep going and keep plotting the average every time, we can keep going as far as we want left and we'll get a picture like this. Next, we'll connect all these points on our chart with a line and get rid of the crosses. So that's how your moving average indicator looks, and this particular moving average has a period of 4, and that's because of the way we constructed it. We were looking at 4 bars every time. This case is a bit different to the average to range because we don't have to plot this indicator in a separate chart. And you'll notice that on the Forex market and in MetaTrader 4, there are 2 types of indicators. Those that are plotted on the same chart as the price, and those that are plotted in a separate chart. Now in this particular instance, we didn't have to plot it separately because the actual range in which the indicator has its values is actually the same of the chart as of the chart. So what we're taking is we're taking the average of the past 4 prices, so it will be somewhere there on the chart. Whereas with the average true range indicator, we were taking the difference of the high and the low. So obviously if your high is 1.5 and your low is 1.4, then the difference is 0.1. It's not going to be anywhere near the current values on the chart, so it will be very far down, so you have to kind of plot it on a separate chart. So that's our moving average. Let's have a look at the moving average on a real Forex chart. So that's our euro-dollar hourly time frame chart, and as you can see here, I've plotted the moving average with a period of 48. So in this case, it means that every single value of the moving average represents the average close price for the past 48 bars. And because this is a 1 hourly time frame, 48 means 2 days, so 2 times 24. So it basically means the average close price on the hourly time frame for the past 2 days. And that's how it's been changing. You can see that it went first down, the average, then it started picking up, and then it started going down again. So how can you use the moving average in your trading? There are several methods of using the moving average, but we'll look at the 2 main ones and the 2 most simple, straightforward, and most frequently used methods. So the first one is using the moving average as a signal generator. Let's have a look at the chart again. Can you see here that when on the left the price crosses the moving average downwards, it keeps going down? So in that case, when the price crosses the moving average down, you would sell, expecting the price to keep going down. And then when the price crossed the moving average upwards, it kept going that way. So you could buy here, expecting that it would keep going that way. And then once again, when it crossed it down, you could sell, expecting that the price would go down. So as you can see, in times when there's a trend on the market, if the price is below the moving average, then it's a downward trend. If the price is above the moving average, then it's an upward trend. So this strategy works during trend times. Unfortunately, it doesn't work during flat times, like when there's no movement on the market, because the price tends to be very close to the moving average and they can cross over very frequently. So you have to be careful when you use this strategy, but do keep in mind that if you see the price above the moving average, then most likely you are currently in an upward trend. Next, the other way of using the moving average is using it as a support or resistance line. And this is actually very interesting. you will notice that our support resistance line were either trend lines or levels, and that's what we talked about previously. But now we've got a moving support resistance line, so let's have a look at that. We've got the moving average here, the same one as we talked about. Can you see how on the right, during the uptrend, the price actually bounced off the moving average one time, the second time, and the third time? So that's not a coincidence. That is quite a frequent phenomenon on the Forex market, and if you find, you have to kind of pick the right period for your moving average, which we'll talk about in a minute. But if you pick the right one for the right situation, you can actually effectively construct a moving support or resistance line, which is very powerful. And there are many different speculations why this works. And for example, one of them is because other traders also use the moving average, and when a lot of traders and decision makers for large funds use the same strategy, it tends to work. And in this case, they see the price approaching the moving average and they know that it's going to act as a support line, so they kind of buy, and then they buy again and they buy again every time that happens. So this strategy may work for that reason. But regardless of why exactly it works, it's a good thing to look out for. And moreover, in our live trading on a real Forex account further in this course, you will see us use this strategy to our advantage to make profits. And I'll explain exactly how I pick the right period for the moving average and how to better use it in your live trading. And finally, the last remark I wanted to make in this tutorial was that the period of the moving average is very important. Let's have a look at the chart again. So this is the moving average with a period of 48. If you plot the moving average with a period of 12, that's how it will look like. And if you plot a moving average with a period of 150, that's how it will look like. So as you can see, all of them are very different, and they can give you different insights into the market and actually different recommendations to what you have to do. So it's up to you as the trader to pick the right moving average for your currency pair, for your time frame, and for your particular situation. Don't worry, it might sound complicated, but in reality it's very simple, and with time you will get the hang of it, and with every single situation you'll get better and better at picking the right period of the moving average. That's all for today's tutorial. Next time we'll be talking about algorithmic trading and expert advisors on the Forex market. And until then, happy trading.